good afternoon. We start here in your business desk with the big story of the day. In fact, the South African Reserve Bank keeping the repo rate unchanged at 8.25% in its first meeting of the year. Governor Lesetja Kganyago has highlighted that at the current repurchase rate level, policy is restrictive. Kganyago adds that global economic conditions remain mixed and the outlook uncertain. He concluded that in most countries, reaching inflation targets, reducing fiscal deficit and containing or lowering debt levels will remain key policy priorities. The governor also took the opportunity to introduce Dr. David Fox, advisor to the governors, as the new member of the Monetary Policy Committee after Kuben Naidu's departure. We're now joined by Mpho Molopyane, the chief economist at AlexForbes. Mpho, thank you very much for your time this afternoon. No surprises here when it comes to this particular decision. There seemed to be a lot of consensus prior to even the MPC meeting.
Yes, thanks for having me today. And you're right, no surprises here. I think it was a widely held view that the MPC is likely to stay put at this meeting. I think, just given the uncertainties to the risk to inflation, which the governor highlighted, that there remains a lot of uncertainty and risks to the inflation outlook. And they would like to see signs that inflation will sustainably revert back to target before they cut policy rates.
Mpho, no surprises again when it comes to the revision, the downward revision of the economic growth forecast. We've seen since last year that we always start high, and at every meeting that follows of the MPC, the growth forecasts are revised downwards. The problems around that, or the causes around that, are actually well documented.
Yes, yeah, and you would recall that when the SARB held the November MPC meeting, we didn't have the third quarter GDP data, which only came out in December, and that was quite grim. And it was on the back of that the SARB made the downward revisions to the 2023 numbers. But I think looking further forward, right? I think what's positive is that 2023 is now behind us, but we now look forward. I think what's positive is that the SARB did not downwardly revise the 2024 figures, so they still expect growth to come, to be around the 1.2% level, which is much better than the 0.6% we think that 2023 averaged.
I'm sure consumers want to know what this all means for them, as we saw food inflation rising quite high, and it seems to be it will remain uncertain, particularly because South Africa as imported good inflation was strong last year, and we saw that being filtered down to consumers. What should the consumers be considering right now when they look at the possibility of food inflation for the rest of the year?
Food inflation, overall, I think food inflation and headline inflation and, most of the underlying food indicators, I think they're moving in the right direction. So yesterday's print for December, which came out, showed inflation headline inflation declining to about 5.1%. Which had come from about 5.5% in the prior month. So that's a move in the right direction. I think headline food inflation also came slightly down. Together with fuel inflation were the key contributors that led to the decline in overall headline inflation. So yes, I think the situation still seems grim, but economic indicators are definitely moving in the right direction. Inflation is coming down. Growth prospects are expected to improve, and on a more forward-looking basis, the expectation is that with inflation continuing to decline, we are likely to start to see the SARB easing policy rates, at least in the second half of the year.
So you're saying that at least from July we should expect to pay less for our debt, but something else that the Reserve Bank governor said that he hasn't said in a couple of months in the previous meetings is the fact that the MPC has been making recommendations for additional means of strengthening South Africa's economy to the government. And previously he was speaking about the fiscal policy itself, that the debt levels are too high. He did sound a couple of warnings, particularly as far as the deficit is concerned. Why should we be worried?
So the reason why we need to worry about the deficit is that it increases interest rate risks in the economy. So if you think about it from a personal level, if you are overly indebted and you go back to a bank and ask for more debt, they're going to charge you a higher level of interest rate. Now, when government debt increases, that increases the possibility of further rating downgrades. Further rating downgrades are also going to affect how other entities in the economy. So you're unlikely going to have banks being highly rated more than the sovereign because they also hold sovereign debt. So when the rating of the sovereign deteriorates, that leads to an overall deterioration in credit risk in the economy. So which means that everybody's cost of debt increases, and that's why we need to be worried. So it increases the cost of debt for everyone, and it also takes away from spending on other more important items like social expenditure as well as infrastructure expenditure, because now government has to dedicate a lot more money to servicing that debt on interest payments. So that's a major concern. If government is, spending the bulk of its money on interest payments instead of social expenditure or on infrastructure, that becomes even more detrimental to growth because the money is going towards servicing debt instead of growth-enhancing expenditure items.
Mpho, we all know that inflation sticky inflation is going to be a focal point on the MPC's decision going forward on interest rates, but there are other external factors that actually impact on that particular decision. And when you think about it, the two wars or two conflicts, I should say, Russia, Ukraine, and the one in the Middle East, have brought us to where we are when you are looking at external factors. Would I be correct to say that if there is another conflict at a scale of Ukraine, Russia, or the Middle East conflict, we should be expecting life to become much more harder?
Wider Middle East war, to the extent that we saw in Russia and Ukraine, would certainly exert hardship on the global economy, so not only South Africa. And the concern there is that it could lead to aggressive increase in oil prices, and that would feed into fuel and other items that need to be transported. So we could find ourselves in a stagflationary environment. So in an environment where growth is very low and inflation is high. And that really makes policy decisions quite difficult, because for the Reserve Bank, remember, their primary mandate is to protect prices. So in an environment where growth is very weak and inflation is high, the SARB will have to continue with its mandate of trying to see inflation within the target band. So it could certainly spell hardship for South Africa and for the global economy.
Mpho Molopyane is the chief economist at AlexForbes. Thank you very much for your time.